At the markets this morning, just opening in the last couple of minutes, investors reacting to the latest producer price index report showing wholesale prices have increased slightly. It's less than what was expected, which is a possible good sign when it comes to inflation. NewsNation's Alicia Nieves is on Wall Street to explain all this for us. Alicia, what does this tell us, this report?
Yeah, Marnie, this is pretty good news, the PPI data that we got. And really, it follows a slew of good news for the month of May, good economic data, that is. Certainly, the jobs report came in better than expected. CPI yesterday came in better than expected. And now PPI, as well as consumer sentiment about a week or two ago. In terms of the actual numbers year over year, we saw the producers and wholesalers paid about 2.6% more year over year versus 2.4% annual in April. That's right in line with the expectation, but some of the underlying numbers were a little bit better. Month over month, we were expecting 0.2% increase for wholesale prices. That actually came in under about 0.1%. I mean, less than expected, but this, again, good news. It isn't the decrease in prices that we started to see in April. It is an uptick, just a slight one. But again, this is better than feared. This data really important and really in focus today because whatever prices increase we see for producers right now for the month of May, that's going to trickle down to the consumer in June and July, giving us a glimpse of what the pressure is going to be like moving forward. For all those also who have, called Trump's tariffs a really negative thing for the economy, this data kind of feels like, the Chicken Little, screaming the sky is falling and the sky is not falling. So far, we have not seen dramatic impacts to our economy when it comes to Trump's tariffs. But more importantly, for borrowers, people, with adjustable mortgage rates or looking to get in the housing market, for example, this is going to apply pressure to the Fed to really start considering cutting interest rates. Actually, since CPI came out yesterday, I've started to hear from more and more economists, more people here on Wall Street, financial experts, that they really are calling now for the Fed to make those rate cuts. Just take a listen to one economist that I spoke to after CPI dropped yesterday.
Right now, when inflation seems to be under control, it's higher than we'd like it to be, but it's not going up. Now could be a good time for the Fed to decrease interest rates while they have some breathing room.
And as you noted, in terms of the markets, they just opened. They opened up to the downside now, but actually they were looking to open up further in the red. The PPI data coming in better than expected, actually staving off some of the losses of markets were expected to have earlier this morning. I'll just note really quickly, markets were down and have been down right now, really on Trump trade concerns, on lack of actual finalized and approved deals, even though there's been a lot of talk about deals coming to fruition really soon. So markets are reacting to that. But back to PPI, this is a better than expected report on top of a slew of better than expected data. Going to apply pressure to the Fed to make rate cuts. Unclear if that's going to happen, but the decision for that will be next week. And we'll, of course, bring that data and that information as it comes. But right now, a slew of better than expected data just continues. Marnie.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.